I really wish it was just a simple little recession that I see coming. But the system, as I said, it's just so fragile, and we have this huge debt wall. The dollar as we know it really is gone. It was gone in 2008. And like I showed you, the way that they make the transition is they keep things looking really as normal as possible, and then they take away your escape mechanisms. And there's nothing you can do about it after that. And that's why it's so critically important to be prepared.
Lynette Zang, economist and financial analyst and founder of Zang Enterprises. It is so great to finally, meet you, but welcome you to the show. Thank you so much for taking the time to join me today, Lynette. Wonderful to have you here.
Well, I really appreciate you inviting me, and it's very nice to be here. Thank you.
Okay. Well, I have to give a special shout out to our amazing viewers. I always say that the nicest people on the internet watch this show. So shout out to Brett, William, Charlie, and Patrick, because they all specifically requested that we have you on. And I love my audience. They always have the best guest recommendations. So for folks watching, listening, keep those coming because I'm really excited to have Lynette on. And thank you again for the recommendation. And Lynette, you are a legend in the space. You've been in this for about 60 years now. There's so much happening right now in the world. So
yes,
for folks to get to know you a bit or understand the way in which you look at the world, on this show, we always start with what we call like that big picture, macro view, the framework in which you look at the world, when you're looking at the economy, the markets. So let's start there, really big picture, high level, and you can take all the time you need to set the table when it comes to that big picture macro view.
Well, I'm 70, and that gives me a nice amount of time to look back and see. So I could tell you, Julia, I have absolutely 100% been groomed for this moment in time. So the big picture, and there's evidence for it because I am an evidence-based decision maker, is that there is virtually no purchasing power left in the currency. And everything, let me back up to move forward here for a second. Everything has a life cycle. My granddaughter just turned 10. I'm going to tell you, you're not going to look at her and go, well, maybe she's going to be 70. Just like you're not going to look at me and go, wow, maybe she's going to be 10, right? So if you learn to recognize what it looks like at all the stages of anything's life cycle, then it gives you a very good picture of the most likely next outcome. So I've been fortunate enough in my lifetime. I've been a banker, I was a stockbroker, and I started my career at Shearson in the 80s. And I stumbled across in 1987, I happened to stumble across non-dollar denominated bonds, which are just bonds that are issued in different currencies. But in those days, you could talk to the head of any trading desk. And so I called the head of currency trading because I saw that I came across this 5-year AAA piece of paper that was trading at about 12 3/4. This was a New Zealand bond. And so if I were going to put clients in it, I needed to understand what I was looking at, because at that time, I think treasuries were paying about 8.5 or something like that. So that was really a pretty big spread. And that's where I got my training on currencies, was from the head of currency trading at Shearson all those years ago. Every morning, that's the way I would start my day, was with a call from her. And then she would give me homework, and at night I'd go home and study. In those studies, that's when I started to see a repeatable pattern. And frankly, there have been more than 4,800 currencies that have existed in this world that no longer exist. And they have the same kind of pattern. That is what I am seeing now. So that's what I teach on my YouTube channel. I talk a lot about patterns and showing what they look like and when they shift. Because when a long-term pattern shifts, it means something. You know, you may not necessarily know exactly what it means, but depending upon how that shifts, that could be a very negative thing or a very positive thing, but understanding those patterns. So for me, I really do understand currency life cycles. I've studied it for many, 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 many years. And when I look at what's happening with the dollar these days, okay, I could tell you, and people out there, all the viewers would know that you can buy virtually nothing with these dollars. And officially, anybody can look this up. Check it out. Do your own due diligence. Go on the Federal Reserve Education Department, the Fred. That's probably my very favorite website because there's all sorts of charts and data in there. And I know even though they changed the formulas, I think maybe they're a little bit more honest in there because who goes there, right? But if you, in the search bar, you put in purchasing power of the consumer dollar, you'll see where it started out at $1, and down on the bottom of that left-hand axis, there's a big fat 0, right? And we are very close to that. Officially, we have 3 cents left in purchasing power out of the original dollar. And when they talk about stimulus, this is what they're talking about. Devaluing their currency and just printing money. And so we're at the end of the currency's life cycle. There is no doubt about it. We have to shift into a new system. And the system really died in 2008. And that's what they've been working on since then.
Okay. Wow. Okay. So looking at the world through the currency life cycles. All right. A couple of threads I want to pull on because you're saying we're at the end of that life cycle. So question for you. Is there any going back, or is this just the end game? Anything we can do to mitigate it? Because it sounds to me like you're saying like, is this the end of like the US dollar? Like, let's elaborate a bit more.
Okay. So first of all, no, there's nothing that anybody can do to stop this trend because the way that the system is developed currently, these are created from debt. And I'm sure everybody has heard how much unpayable debt there is out there. And it does look like that wall is cracking in a rather pervasive way, especially on the corporate sector, because the corporate sector can't go in and just print more dollars like the government sectors can. So yeah, we're at the end. Can we mitigate it? 100% we can mitigate it. This is not all doom and gloom, but this is a natural progression. And I think that we need to take our power back. So that's why I am a huge, huge sound money advocate, which is physical gold and physical silver. Because what this does is it prevents their ability to inflate it away. The single most important function of gold is to hold its purchasing power value over time. Additionally, and this should be taught in grade school, but it's not. When they sold us the money system, right, they needed the economy to have the ability to specialize. So you have a banker, you have a farmer, etc. So money was supposed to have 4 key functions: a tool of measure, a tool of barter, a short-term store of value to ensure that you are properly paid for your labor today, and a long-term store of value to ensure that whenever you use that money, you are still properly paid for the labor that created this money to begin with. But the problem for governments was that if they taxed you on that system, you knew about it and you might not agree. So they came up with this fiat money system, this stuff, right? And they know how to make the transitions. They've done it so many times. They totally know how to do this. So they came up with this system. And who doesn't know that if you just sit and hold this dollar over time, it will lose more purchasing power and you will be able to buy less and less and less with it. I think everybody realizes that today. So that means that one of those key functions is gone, right? Long-term store of value. Where they want to shift us into digital assets, actually, if you read the work of the central banks and the International Monetary Fund, which all the central banks are part of, they remove the second function, which is a short-term store of value. So that when you get paid, if your money is automatically deposited into your bank, because that's what would happen if it's all digital, right? They would be charging negative rates in there. Yep, I'm going to go on the record to say we will be seeing negative rates. There's not one little doubt in my mind about that. But when you make that deposit, immediately those negative rates will erode the principal. Because once they have all the purchasing power, they have to attack the principal. They can't inflate away any more of the purchasing power.
Why would we have the negative rates? Is it to punish the savers? Like, elaborate a little bit more on like why we would see negative rates.
Absolutely. We know, everybody knows that this is a consumer-driven economy. And when consumers are nervous, they stop consuming, or they at the minimum slow that down. So now you're sitting there and you're watching your principal erode. You know you haven't gone shopping. You know you haven't spent money, but you're watching your principal erode. So what is the most likely thing that you're going to do? You're going to go spend that money on anything that would hold its purchasing power more. So they would use the negative rates, and this is what they're saying. And anybody can read it, and I'm happy to send you links so you can see the hard evidence of this. But they would use the negative rates to stimulate the economy, to get consumers to continue to consume, even though they can't or they don't want to.
God, I think you point out that a lot of people know, they realize like the purchasing power of the dollar has declined. I think a lot of people feel that, especially in the form of inflation, that
Exactly.
you can buy fewer things. And we're recording today. It is Wednesday, March 12th. We did get like the February CPI. It eased to 2.8%, which was in February, which was lower than expected. But I'm kind of hearing from you, Lynette, and I don't want to put words in your mouth, but I want to hear a bit more. Inflation, still a problem. It's going to be a problem. Is that right?
Huge. Yes. Because the whole system is based on confidence. I mean, what supports this stuff, right? What are we told? The full faith and credit of the government. There was a time when this backed that stuff, right? That was different, because this is a commodity and it's used in every sector of the global economy. But this is only used in the financial sector. So when you're looking at it, yes, absolutely, we know. I mean, think about this for a second. In 1971, the average wage was like $10,200. And a family of four could live on that one wage. Today, it takes two wage earners. The average wage is something like $68,000 or $58,000, and you're living paycheck to paycheck. And there are a lot of people that are earning up to $250,000 a year that are living paycheck to paycheck. That's the impact of inflation. Because when you think about it, you know, the average price of a house, of a car, of food, etc., has really been, the average price in terms of these have gone up quite substantially, even as we're sitting here talking. And they bring out the CPI. Well, you know, hedonics, they change the way they account for things rather than actually changing behavior. So if you can no longer afford steak, they put in hamburger. When you can no longer afford hamburger, they put in hot dogs. But if you actually track it word for word, or product for product starting in 71 and going forward. And actually this data I know because I was just looking at it. Since 1913, when they put this system in place, food in the BLS typical basket of food has gone up over 2,500%. Even in the manipulated spot silver market, that went up a little bit more than 3,000%. So silver maintains your ability to purchase your same basic goods over time. But spot gold, which again, manipulated, spot gold went up over 13,000%. same time frame. So not only did it maintain your ability to purchase the same goods and services over time, but it actually enabled you to expand your wealth base had you had the ability to hold that gold all that period of time and transfer it to your family, et cetera, et cetera.
What if you can grow your gold so you're not just preserving, but you're growing your wealth in an asset that can't be inflated away by money printing? Monetary Metals lets you do just that. You can earn 3% on gold, paid in gold in their secure gold leasing program. And if you're an accredited investor, you can earn even higher yields in their bond offerings. Previous bond offerings have paid 6%, 12%, and even as high as 19%. The interest you earn is paid in ounces of physical gold or silver, which you get in addition to any price appreciation that comes from gold and silver during the year. The question is this: why earn in dollars when you can earn in gold? Join thousands of investors who are earning interest in physical gold and silver every month with Monetary Metals. Visit monetary-metals.com/Julia to learn more. Yeah.
Does that make sense?
That does make sense. And I'm going to dive a little bit deeper here with you too. Okay. So as you point out, also, I feel like when it comes to inflation too, we all have like our own baskets of goods that we probably buy over and over. And I can tell you, like, I notice, and I've noticed the changes on what I've seen in my own basket of goods. So what is more of your outlook on the economy? I know you have talked about this kind of risk of hyperinflation and the weakening dollar. Can you elaborate a bit more on more of your views of the economy? I think we all kind of sense it, at least personally, what we're feeling, but what is more of your outlook there?
Well, I feel like the economy is so stretched because money is created from debt, and that debt, they say that it's not sustainable. Well, frankly, it hasn't been payable in a very long time. And in fact, even when they talk about the interest on the debt, it's kind of a lie, because when you run deficit spending, that's spending money you don't have. That's like the government taking out a credit card. But if you as an individual had a credit card and you were not paying all the interest on that card, that interest goes into the principal, and now you're compounding interest, right? You're paying interest on top of interest on top of interest. And if you do that, are you ever getting out of debt? No. And that's what our government has been doing. And I did this study, I think it was back in 2009, and anybody can do this. Again, you go into the Fred, you can see all of the data going all the way back there. And I looked at the debt levels because I'm looking at the deficit spending. And at that point, it was at about $1 trillion. And I said to myself, well, it hasn't been that bad up until this financial crisis, right? Up until 2008. So why are we servicing 13 trillion in debt if we've only just recently gone into $1 trillion in deficit spending? And again, anybody can go in and look at deficits and surplus, and you can see this for yourself. And so I went into the data behind all of that. And what I discovered was that we were compounding interest. So they don't talk about all the interest that we're compounding. They just talk about the interest that they have to pay this year. So it's garbage. It is. It's really garbage information. But that puts a huge strain on the economic system. Right? And the level of debt that has been created because it trickles down. Here's your trickle down theory. It trickles down from the top governments to the corporates, to the individuals. Everybody's credit cards are essentially maxed out. And it's just the emperor. We're not going to say anything because the emperor has no clothes. But there is a debt wall that is coming due in the corporate sector. We're seeing rising defaults in the individual sector, and we're seeing governments around the world. It used to not be a good thing if a central bank had to buy back the debt from the government. That was what a third world country did, not what an established advanced economy did. And yet we've been actually doing that since, what year was that? I believe it was 2000. That was the first time, again, checkable on the Fred. Anybody could go in and take a look, but our Federal Reserve had already started buying back our debt, but very quietly, because that was not a good thing at all. Suddenly, with the great financial crisis, that became a great thing. No, it's not a good thing, but everybody, all the central banks are doing it. And the other challenge that I'm seeing right now is lowering rates into this inflationary environment where we have the threat of tariffs going back and forth. So when I look at the state of the economy, it was already extraordinarily fragile going into this episode, and markets like certainty. They like certainty. There is no certainty out there. And so, look, in 2008, when the system died, because of all the studies that I had done on currencies and currency life cycles, I 100% knew that food became the single biggest issue for people during these transitions. Because let's face it, when one currency goes away, another one is going to pop up. Obviously, it should be obvious anyway to everybody, they want to push us into a purely digital surveillance currency. I don't think that's a very good thing. I want to see a currency that has a component of gold and silver in it, but especially gold. And that gold must be convertible. In other words, if I don't like what my government or my central bank is doing, like we used to be able to, I could walk in the bank with one of these and walk out with this and pull the gold out of the system. Because what gold does is it forces fiscal responsibility, right?
Yeah.
There is no, once we went to a pure debt-based system in 1971, there is no fiscal responsibility. It's tax and spend and spend and spend and spend and tax some more and, plus the inflation tax.
Let me ask you about gold. This is a very popular topic on this channel. So is silver. So I know this audience, not only the folks who recommended you, but I know this audience is going to love what you have to say. So I'm looking at gold right now. It's at 29.35. It's near like all-time highs. So a couple questions. Maybe let's start with gold's behavior lately. Has that been normal, expected? Because even when markets were ripping, gold was up as well. I know like markets have had a lot of trouble lately in like the first couple months of the year, but maybe just kind of bigger picture, is gold behaving how you would expect it to behave?
Absolutely, because it is the only flight to safety trade that there is. The governments would also like you to think that government bonds are a flight to safety because, hey, they can just print the money they need to repay you. But the reality is gold. And of course, this is according to the Bank for International Settlements, which, as you know, is the central banker's central bank. Gold is the only financial asset that runs zero counterparty risk. It's got thousands and thousands of years of experience going through what we are going through, what we have been going through, and what we're about to go through. So gold, that's why it's, here's the thing. Where's this stuff used? One place. Here's my Bitcoin, right? Which isn't really Bitcoin, but it is gold, right? It is gold color anyway. It's not real gold.
No, not real gold. Yeah.
No, they want you to think that this is digital gold, but it's really not. When you're looking at gold, where's this used? One place, and it's a speculative asset, and it is, I believe, going to be facing its first really big test. I don't know if it's going to pass it or not. Maybe it will. Maybe it won't. We're going to find out. But you have this, and where is this used? In every single sector of the global economy. Therefore, of everything, all financial assets, all assets, period. This is the only financial asset that is used in every single sector of the global economy. So therefore, it has the broadest base of functionality and the broadest base of demand. Now we see the level of energy that it takes to create these cryptocurrencies and all these data centers that are going in, et cetera, et cetera. These cryptocurrencies use the energy. They don't store the energy. Takes gold it takes energy to mine gold and silver. But that energy is stored, and then it is used in every single sector of the global economy. And the main difference between gold and silver is this gets used up, whereas gold is recoverable. So therefore, it can be recovered from one application and used over and over and over and over again. That same level of energy that pulled it out. I mean, to me, I think that's a pretty big difference.
I've seen you talk about like what the value of gold could be or should be. And I want to say it was a recent, I think a SOAR Financially episode, the potential for revaluation of gold, that it could be worth 40,000 an ounce. Do you yeah, I would love to hear more on that.
Okay. Because this, I believe very strongly that everybody should have the lion's share of their wealth in an asset that is in a long-term positive trend, and the least amount of their wealth in an asset that is in a long-term negative trend. Like, duh, right? But how do you really know that? For stocks and bonds and anything and cryptos, anything you can only convert into this, you got to look at the purchasing power. But how is that money? We go back to how is that money created? Because you really do have to know what the true fundamental value of any asset or instrument is. We know the Federal Reserve admits that the value of this is zero. So you can have 10 trillion, like I have a $10 trillion Zimbabwe note, and it's worth nothing because that's what fiat money, government debt-based money is worth. But gold is different. So this is money, this is sound money, and that's money, right? They're both money, but they're the flip side of the coin. So how do I know how much gold is really worth? It's very simple. You use the debt for a proxy to how much money has been created. And you take all the debt. I do this globally because this is a global issue. I take all the debt that's been created, and the Department of the Interior runs a report on an annual basis of how much gold is in the ground yet, as well as above ground. Because again, all gold is recoverable, and we can account for about 98% of all the gold that has ever been mined. So to do it really simply, you just divide all the debt by all the gold, and that gives you somewhere north of $40,000 an ounce. And so now you say, Lynette, that's just crazy. Spot is at 29.30 and oh my God, it's at the highest ever. First of all, I worked on Wall Street. Do you really trust that they are giving you any good price discovery on anything? No. There are all sorts of tricks of the trade. But I'm going to tell you, I'm not looking for Wall Street to tell me when gold is worth that, because it won't happen. But what will happen is when the public loses the last little bit of confidence that they have, and rapid inflation would do that, absolutely, then they have to, in order to regain the public's confidence, they have to revalue this against this. And that's when it will begin to move toward its fundamental value. And that $40,000 number is just because you put value in numbers. I don't put any value in numbers. They don't mean anything to me. It doesn't matter how much I have. Here you go. $10 trillion Zimbabwe note, and I can't even buy an egg with it. So I always encourage people not to be blinded by numbers, because when it goes to 40 or it could, good God, it could go to 1 million. It could go to 5 million. It could go to 10 trillion. It doesn't really matter, those numbers. Gold just is about holding your purchasing power intact over time. And that's really what I'm looking at. So God knows what it's going to be. That's on a 1-to-1 basis if they were to do that overnight reset today. But no doubt about it, it's going there and much higher in terms of dollars. But
let me ask you this, because you're talking about like the lion's share of your wealth. do you personally, is the lion's share of your wealth, is it in gold and silver? Do you own stocks? Do you own other assets? Like, how do you think about how you want to be allocated? I have some guests who say like, okay, I do like a 10% allocation to gold in my portfolio. Just maybe could you put a little bit more color on like, how do you personally like allocate?
Well, considering the fact that I started my career in banking when I was 15, studied business finance, and then became a stockbroker, I'm very, very comfortable, and I do consider myself a bit of a technician. And since I just said, there is absolutely zero doubt in my mind, but that the system died in 2008. I'm not a trader. That's not where my mentality is. I am a long-term strategist. So nope, I do not own any of those fiat money assets. I have dollars because that's still our tool of barter. If it wasn't, I wouldn't have these either, because I know very well that they're going to zero. And they really probably already are there. It's just the confidence that's holding it together. So I am allocated. This is where I hold the lion's share of my wealth. Absolutely no doubt about it. But I work on food, water, energy, security, barterability, which for me is primarily silver, barterability, wealth preservation, community, and shelter, because these are all the things that we need to lead a reasonable standard of living. And why would I own what I know is going away? I don't care about getting a trade. That's not important to me. And honestly, I've watched Bitcoin since it was $7 a coin. And you might say, well, what an idiot you are. Why didn't you buy a bunch at $7 a coin? And I'll tell you why. Because I knew that was the new system coming in, and I cannot support it. Cannot support it. To me, it is a Trojan horse to get people's eyes on it, get them comfortable, and make the transition, because that's how they do it. And I can even show you really simply how
Is it
they
a Trojan
do
horse
that.
for CBDCs? Explain. I want to hear more on that. Explain that.
For CBDCs, or even if there is, President Trump has said that he is against CBDCs. We'll see what happens in the future. But even if he's got Bitcoin or any of that, that's all digital, right? So where's the US going? If the rest of the world are going to CBDCs, are we going to be the only ones that don't have one? I don't know. But let me show you how they make this transition, because it's really quite brilliant. Okay. First, we started out with this $20 gold piece. This is an ounce of gold. Then they converted it. You could have this, or you could have this $20 gold certificate. I could go in to any bank, bring in this, and walk out of the bank with that. 1913, they put the Federal Reserve note in there. They're pretty similar. 1933, these two went away, but you had 20 years of people using this. So they had a high level of comfort. They had a high level of adoption. Ba-bam. You had the roaring 20s, because that's the way they do it. They make whatever they want to transition into. They let the public, or at least portions of the public, really experience a lot of wealth and a lot of growth, which is exactly what they've done with this, right? With all of the cryptocurrencies. So do they have enough adoption? Probably they have enough adoption of this to make the transfer. Do you trust that they really have your best interest at heart? I think we should all be our own central bankers at this juncture, because there is nothing of value in any of these currencies, whether it's this stuff or it's this stuff. It's used in one place. So that's my battle. Is I'm working hard with the Sound Money movement. I'm on their advisory board to get gold and silver set up as legal tender in the States again, but also globally, so that if enough people convert their fiat into some of this, if we can get 3% of the population to do it, I think we can have a seat at the table, so that that new currency actually has a solid foundation, but critical. You can't believe them if they just say backed, because they're using backing and pegging as interchangeable, and they're not. Here's the difference. Zimbabwe just was trying to get their public to trust them again. They've had 6 overnight revaluations and new currencies. I've been tracking that since 2006, right? So they're in their 6th iteration of a new currency. And this was Zimbabwe gold. And it was 40% backed by gold. And they promised and vowed that they would not print more money than the amount of reserves that they had, blah, blah, blah. But it only was in digital form and you couldn't convert it. The citizens couldn't go in with their Zim gold dollars and walk out with gold. So the population is not trusting it or adopting it. And boom, they just came out with that new currency in, I think, April. And they did an 44% overnight revaluation in October. If it's really backed, that can't happen. That cannot happen. So you have to understand the difference between backing and pegging. All they did was peg their currency, the gold in their currency, to a manipulated spot price. It means nothing.
So you mentioned sound money. We just had Dr. Judy Shelton on the podcast last week talking about sound money as well.
Yep. So I love her.
Yeah, this audience loves her too, so I know they're going to love you as well. Are we headed for a monetary reset in your mind? If so, what does that look like? Could you explain what that would even mean?
Well, it really hinges on the confidence, right? Now there are layers of confidence that are built into this system, right? And I've been watching all of those layers go away. First was in 2008 with the bank-to-bank borrowing, and that they don't even report that anymore. Interbank lending, boom, went to zero because banks lost confidence in other banks to be able to retain the money. 2015, central banks lost confidence in other central banks moving forward in a synchronized way with the Swiss surprise. When the Swiss government and central bank came out and said, no, we're going to maintain the peg to the euro. We're going to do it. Highest priority. 2 days after it was their highest priority, they shifted. And so central bank to central bank confidence gone. Then I believe it was June of 2022 when central banks had been using forward guidance since the great financial crisis. In other words, telling banks what they were going to do in advance so they could get into position to benefit from it. And they kept telling them 50 basis point move, 50 basis points, 50 basis points. And then bam, they did a 75 basis point. So the market to the central bank's confidence gone. There's only one layer left. And that is the public confidence in the dollar, in the system, in those that are in charge. And that's what President Trump has frankly done really well for those people that follow him, is they have a lot of trust in him. But one person didn't get us into this mess. One person is not going to get us out of this mess. We have to go into a new system because there is no purchasing power left in this currency. So I believe that what it looks like is a hyperinflationary depression, very similar to what we had in 33, because this makes it pretty simple. There's only one way to fight deflation, and that's with inflation. And a depression is just a more severe form of deflation, which is the biggest bugaboo for central banks. They like inflation. Well, their job is to regulate the speed by interest rates. But so that, unfortunately, is what I'm seeing that the whole world is going to go into, which is why we also do a lot of work on helping people develop communities, because we need local community to come together to weather this storm. I've been working on this since 2008 because there was not one doubt when I saw what happened that the system went down. And I was getting ready to retire. And I had a little 2-bedroom condo and I locked the door and off I go. And, isn't life great? And then 2008 happened and there changed every plan that I had. And I ended up buying a property that I felt that was big enough if I needed my children who live in Phoenix with me, if my children needed to come and be with me, and I needed to make sure I could feed them. Now I ask you, do I look like a farmer?
Well,
But I became an
I don't know.
urban
You could
farmer.
probably do it. Yeah.
Yep, I could and I did.
Yeah.
So I bought a property, not a big property. I've got a half an acre in dead central Phoenix because I knew my girls wouldn't go anywhere else anyway. And I started to learn how to do that because food is the single biggest issue for people. And I think that we can look out there and see that more and more and more people are getting hungry. They're getting very, very hungry, and they're being deprived of the food. So I encourage everybody to go to their local farmers markets and meet the people that create your food and volunteer and give them a day's work, give them a couple days work, because there's always work to do on a farm. Go to a community garden if you live in a big city like Manhattan, right? That's not necessarily the easiest thing to do, but there are those community gardens. And even if there are no plots, hey, go in and volunteer and get to know that community, because they're probably going to be a bit more like-minded. But let's face it, if you're hungry and you need to feed your children, who's going to get the food? Somebody that they know or somebody that they don't know? So I encourage everybody strongly to develop some skills. I mean, if I had to lay irrigation, I can lay irrigation. I know how to do it. Do I want to do it? No, I don't want to do it. But could I do it? Yes, I could. These transitions are not easy. And generally speaking, 80% of the population ends up in abject poverty. In Zimbabwe and as well as Venezuela, those numbers are 90%. And Venezuela as well is on their sixth iteration of a new currency. And they can't, once that confidence is lost, it is not easy to get back.
You're prepped. You are, I don't know if it's fair to say prep. I don't know if prepper is like a nice term or what. You are prepared for a serious situation. Do you look at that as more of like an insurance policy, not like an absolute certainty? Do you get pushback from folks who say like, Lynette, why are you doing that?
Yes.
Like, what is the pushback do you get? What's the pushback you get?
Yeah, of course. My whole look, I'm the youngest of 7, right? And I come from a very accomplished family, generally speaking. And yeah, they just thought, oh, she's the crazy one. She's the crazy one. I don't get that anymore. Interestingly enough, and surprisingly enough, no, I don't really get that anymore. But do I get pushback? Well, you can push back all you want. You're not paying for my development of all of these things. And let me tell you, in 2020, when people couldn't get toilet paper, I was able to give out a lot of toilet paper.
Yeah. Yeah, certainly. Well, do you ever have folks who say, Lynette, that could never happen here in the US? Like, what is the argument that you get faced with?
Yeah, lots of people say that, but that's because they're in the normalcy bias. I've studied this. I'm 70 years old. I've been in these markets on some level since I was 10 years old. I have been groomed for this moment in time, and I am a data-based decision maker, period. So it is not from emotions that I say this. There are 4,800 examples of this. And every single time they want you to think that this time is different. And it never, ever, ever is. Mm-hmm. And in fact, in 2020, I found the hole in my personal strategy because I'm in Central Phoenix. The capital is not far from here. And there were riots at the Capitol. And up at my daughter's, one lives in Paradise Valley, the other lives in Scottsdale, really nice areas. And there were riots at Fashion Square. And I thought, aha, because that night I went to bed with a gun in my bed. Mm-hmm. I went like, this is not how I'm going to live. No, 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 no. And no, there is no doubt in my mind. I've studied this for too many years. So I actually went out, and it took a while, but I found an off-grid property, and I have all of my mantra: food, water, energy, security, barterability, wealth preservation, great little community and shelter up there, enough to house 40 people and to support a community of 40 people.
Okay, I want to ask a few more questions because, all right, how one preps? You said food. Is it livestock? Do you have seeds? Like, or is it growing vegetables? And then on the water, is it getting water from like a well? Do you have like a natural water source, or is it like water purification? Like, how does one even begin to prep? Okay, I'll tell you, like, personally, I have like emergency food supplies and hazmat suits and like, I don't know, like an equipment thing. Like if I have to get like to my parents' farm in Virginia, if something horrible happened, I wouldn't say I'm like a prep or anything, but I have like a little go kit, if you will. How does one prepare? What do you do?
Well, first of all, you do it one bite at a time. How to eat an elephant, one bite at a time. But this is also why I say community is so important. But you step back and you go, this is how I did it for myself. I said, okay, where do I feel vulnerable? Where do I feel the most vulnerable? Those 8 things. Where do I feel the most vulnerable? And then you do some things so that you don't feel vulnerable about it. For me, for food, there's all different ways that you can store and create fresh food depending upon what your circumstances are. So I have this little 1/2 acre lot and it's all grown out with probably 90% food. I like flowers too. So we've got bees and things like that. But let's say that you're in an apartment in Manhattan. You don't have a whole lot of space there. You can, however, get maybe 10 pounds of broccoli sprouting seeds, right? Keep them in your freezer. You rinse them off for 3 days. You have live nutrition and they don't take up a whole lot of space. So, again, I think community gardens when you're in, any kind of city is awesome. But yeah, your food, it depends on your circumstances, but there's always a way to accumulate. Up in my bug out location, I have long storage foods. So like lots of rice and beans and things like that hold for years and years and years. And I have enough there to support those 40 people for about 3 months, which would be about how long it would take us to start really growing food up there. But I've also we're redoing them because, I don't really necessarily know what I'm doing. Now I have people hired that know what they're doing, but I don't necessarily know what I'm doing. I just know that I got to do something. So I do it. But I have, 3 geodesic dome hothouses that gives me the ability. They're all climate controlled. I don't have anybody up there right now, which is why I don't have any food growing right now, other than orchards. I put in 2 huge orchards, a kitchen orchard and a production orchard to feed lots and lots and lots of people. If I could feed the world, I would feed the world. I got to be honest with you. I would. It's just a big deal to me, but food, just do something. There's something to do for everybody, no matter what their circumstance. But food is the biggest issue for people. Water can be a little bit more challenging. Here in Phoenix, we've been in a drought for like ever, but I have a $75,000 gallon swimming pool, and I've converted that into a swimming pond. So no chemicals. And yes, I'd filter my water before I would drink it, although my dog doesn't. She's fine, but she drinks it. And I have food growing islands on there. And actually I put in 4 other ponds. So that's my rain catchment. And that's also a place for me to grow fish. I have crawfish as well as, tilapia. And I believe we're going to be doing some catfish. I have chickens. So I just brought in 10 dozen eggs to the office last week to give away because I know eggs are crazy.
Oh, yeah.
Couple backyard chickens. They're so easy and chickens are so sweet. You can't do that in Manhattan.
They are really cute. Yeah.
They're so sweet and they give you eggs. And we also actually grow our own meat birds as well. eventually, when I get stable people up at the bug out location, then yes, I will. We already have all the plans set out, and I will be doing, cows, dairy cows, meat cows, everything.
Yeah. Well, you were definitely prepared and very organized. I was always curious because sometimes I do ask folks, I'm like how they're prepped if they come on the channel. I kind of get that sense. All right, so let's kind of round things out here because you mentioned like the state of the economy right now, that it looks fragile. How are you
Yeah.
thinking about? Do you see like is there a recession in sight in your mind, or what's kind of more of your outlook for the economy?
I really wish it was just a simple little recession that I see coming. But the system, as I said, it's just so fragile, and we have this huge debt wall, and things have shifted so dramatically. But I think I'll put my neck on the line because as witnessed by the monetary velocity. And the monetary velocity is how quickly money changes hands. And again, a lot of what I try and teach are patterns, right? Recognize the patterns and recognize when there's a shift in the pattern. And the monetary velocity has been dropping pretty severely since 1997. And a little blip maybe here, a little blip maybe there. And it was even worse than it was during the Depression in 33. And that was back in 2013. It was already worse. It's much worse now, except there's been a massive spike upward. And a lot of that has to do with the inflation, but that is a major pattern shift to me. And so, yeah, I'm really, we need a big crisis to shift into the new system because you're going to have to get people to comply, and they need to be scared enough to comply and go along with what you want to do. That's not even my biggest battle. My biggest battle is getting sound money back in the system. And I didn't even really realize that until I hate to tell you this, but relatively recently, and I've been doing this forever and ever and ever. No, not just a simple recession that we come out of. The dollar as we know it really is gone. It was gone in 2008. And like I showed you, the way that they make the transition is they keep things looking really as normal as possible. And then they take away your escape mechanisms. And there's nothing you can do about it after that. And that's why it's so critically important to be prepared. It is. And look at what's happening with energy. All right. The tariffs back and forth, but people are struggling to pay those bills. Is that going to get any better? So all of those 8 pieces that I said, that's what I've done for myself. Food, water, energy, security, barterability, wealth preservation, community, and shelter. And arguably community is the single most important thing right now because we just don't have that luxury of time. We don't have it. I've been saying for quite some time that I think the inflation will be quite noticeable by June of this year. And I stand by that. Might even happen sooner. There's a lot of uncertainty in these markets. These markets are way over leveraged. There's way, 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 way too much debt, and sides are shifting. And so we've got to issue a bunch of debt in our government, the US, and I'm wondering who's going to buy that debt. Is it just going to be the central bank buying it back again? Or what? Because frankly, the 2 biggest buyers, China and Japan, they've been liquidating and reducing their holdings of our debt since 2013. I would call that kind of a run on the dollar, very similar to what we saw in the 60s when foreign governments were sending in dollars and pulling the gold out of our system, which is basically why Nixon closed the gold window and took us off the gold standard.
But you've also seen central banks in the East like buying gold. What do you make of the central bank buying of gold? And do they know something we don't know? Because it's been interesting. Like from what conversations I've had with guests, like it's not like the individuals buying gold or whatever.
I don't really think that that's necessarily so. It is definitely the global central banks. And yeah, do they know something you and I don't know? Heck yeah. They're the ones that manage the value of the currency. How's that worked for us? Pretty badly. So, yeah, that's why they're buying gold, because they want to retain their power. They want to retain their choices. They want to be there on the other side of this mess to control it into the next iteration. I don't want them there myself, and I hope we have a choice about that. I don't know whether or not I will, but I'm fighting for the choices for everybody, and not me. Let's face it. I'm old. I'm only going to be here another maybe 30 years, but I have children and grandchildren, and eventually probably give me great grandchildren, and on and on and on. And if we don't come together in community and demand sound money, at least a portion of our money in sound money, then those future generations will be absolutely back in feudal times with just a few people owning everything and everybody else leasing it. And if you're the one that's leasing it, who do you think dictates how much you're going to pay?
The person who owns it.
Exactly. Exactly. Yeah. And we have a choice. Right now, we really do have a choice. And I do believe that this is the greatest opportunity that we have ever had to take our power back and get sound money back in the system.
Would that also be just getting more like back onto more like a gold standard, if you will?
At least a partial gold standard. Yeah. Yes, absolutely.
And the other was like gold-backed bonds was another idea that was floated.
Right? So the gold-backed bonds, does that mean that at the end of 50 years, I actually get to have the gold for that bond in my hand? Because if I don't, it's garbage. And it doesn't mean anything. And that's what I'm saying. And we're doing a lot with asset-backed right now. That's the big buzzword, asset-backed. Let me tell you, if you cannot convert into the underlying asset, how do you know that it's real? How do you know that?
It's a good point. Until you can get it delivered, you don't know.
Exactly. And I think I think it's so critical for people to understand that and not be blinded, because, you asked me earlier, do people give you pushback? Everybody should be questioning. Go ahead, question me, ask me. I give you all the links on not all my research, or you'd be reading a book every week, but on a lot of the research that I do, if I put it up on a slide, you go read it yourself, dig a little deeper for yourself. And if you disagree with me, I will support what you say, your ability to say that 150%. We can all have our own opinions. And that's really all I can give you. It's a very well-educated opinion because of how long I've been doing this, whether it's on the tangible asset side or the intangible asset side. And there's just no doubt in my mind where we are, because do you know anybody else that's studied? Maybe Judy Sheldon, she knows way more than me, I'm sure. But how many other people do you know that have studied currency life cycles for all these years since 1987?
Not that many. No.
No.
Well, I have to say,
go ahead.
Oh, no, go make your point. Don't worry about
I was just going to say, so do I take somebody's random opinion of something, or do I take my well-educated opinion? I'm going to take my well-educated opinion. I'll share with you. I'm not going to not like you. And guess what? I'm even prepared for you. If you don't believe in this, I've had so many people say, well, if they don't get it, then it's just too bad for them. That's not how I feel, because what I'm asking people to do is have a major paradigm shift. And that means that you have to admit that what you have believed your entire life is a big fat lie. And that's not an easy thing for people to do, especially when you have the formal program that is actually called perception management. Because if they can manage how you perceive things. They can manage how you move through them, right? Like I love this. This is probably one of my favorites. Price stability. Do you know what price stability is?
Well, I know it's okay. That's one of their mandates around like inflation. I don't know. It's a bingo buzzword to me. Yeah.
Right. But wouldn't you think,
like
if you hear the word price stability,
Yeah.
don't you think that that dozen of eggs just costs the same thing over time? It's got a stable
No, it won't.
price.
No. Well, you would think that by the language, but I
exactly.
can tell
And
you
it is the
doesn't. Yeah.
language, right?
Yeah.
But for central banks, I mean, God, Powell just doubled down on it the other day. I was listening to it. Yep, there you go. For central banks, price stability is inflation at a level low enough that you do not change your spending patterns. You do not ask for more money in employment. That for them is price stability. That's not price stability for you or me. That gallon of milk going up 2% a year every year is just low enough that you still buy the milk.
Right.
I just heard today, I was on Bloomberg as I was getting ready for this, talking about there could be some relief in egg prices. And I thought, okay, interesting. What is that? Well, demand has slacked off because they've gotten so expensive. Woohoo!
Which, yeah, there you go. That doesn't really alleviate the problem. People just can't afford them. Yeah. Yeah, it's pretty expensive. Why buy my eggs? I have like you said, farmers. I buy pretty much everything except for like lemons because I'm in North Carolina, and like olive oil and basic things like that. But I buy pretty much everything from the local farmers market. Like I know the names of my farmers. I can tell you who I buy produce from when their stands are open. Like I've gotten to know them, like their families who work these stands as well. But yeah, I think that's the way to do it is, like you said, build relationships if you have access to it.
Exactly. And I think there are farmers markets in pretty much every place.
Yeah, we're really lucky in North Carolina because ours, I think it's 300,000 square feet. It's huge. It's massive. Yeah. So anyway, Lynette, I have to say, I've really enjoyed having you on. You were so fun to talk to and listen to. And the thing I love about this show is I get to hear from so many different folks and different viewpoints and get to be open-minded and like you said, like sometimes you have to do like that paradigm shift, if you will. And I feel like I learned a lot from you. I feel like this audience certainly will. Before I let you go though, can you do a couple things for us? Let folks know where they can find you and follow your work. I think you mentioned a YouTube channel. Plug that, please. And any parting thoughts, anything that you would like this audience to think about, the floor is all yours.
Absolutely. Well, I'm very active on YouTube and Twitter at the Lynette Zang, and Instagram and Facebook at Lynette Zang, and also the website, which we're redoing right now, but LynetteZang.com. We also like human contact. So we have a great number, which I love this number, 833-GLD-ZANG. So it's pretty easy to remember, but I'll translate it, 833-453-9264. And what I would like people to really know, I always try and do, what if I'm right and what if I'm wrong? And if I can do something that it really doesn't matter whether I'm right or wrong, then that enables me to sleep well at night. So with gold, with the bug out, with all of this stuff, the worst thing that happens, boo-hoo, I have gold, I have food, I have really good food, clean food that I know the water, I know everything where it comes from. Do not procrastinate. If you're procrastinating, you're thinking you're going to know the second before. It takes a while to prepare, but definitely become your own central banker. We execute a sound money strategy that's based upon those repeatable patterns that happen every single time. So what we're trying to do is put you in the right place at the right time with the right asset. And it's built in layers. So no matter where we are in this trend cycle, you are just fine. So that's pretty much it.
Lynette Zang, founder of Zang Enterprises. So great to have you on the show for the first time. Thank you again to the folks who recommended Lynette. Really appreciate you being so generous with your time, your ideas, all of your knowledge, your wisdom. Thank you so much, Lynette.
Thank you for having me. It was fun.
It was fun. Thanks again.